Hello and welcome to the Rising Tide market update for the June quarter of 2026. Over the next 4 to 5 minutes, I'll walk you through some June quarter commentary, touch on the stock market performance for the quarter and the year, the Australian budget, ethical and standard index products, and I'll wrap up the conversation with a look at SpaceX and what it means for your portfolio. Now, during the June quarter, global stock markets were strong, rebounding from the uncertainty we saw in the previous quarter around that US and Iran conflict. That, along with positive, albeit slowing economic growth, was a really supportive backdrop for global equity markets and earnings. A return of certainty to the stock market and moderating interest rate expectations sent the markets higher. Locally, our local market was weighed down by the opposite interest rate concerns to the upside, economic headwinds, and a lack of technology exposure that drove those other markets. Bond markets for the quarter remained or finished in positive territory, and really positive to see that markets broadened beyond the Magnificent Seven, those large US technology companies, to other sectors and areas, showing a broad rally in companies across the board, across the economy. For the quarter, we can see the S&P 500 led the market at 14%, Euro Stoxx 50 up 12, FTSE 100 marginally above zero, and then the ASX 200, another laggard, up almost 2%. Looking at the whole year or the full financial year, the US and European markets up anywhere between 19 and 23%, so a very strong above average year. ASX 200 still strong, but definitely the laggard, up 6.0%. for reasons mentioned. Now, the chart on your screen here is of the Vanguard High Growth portfolio, a really familiar portfolio for Rising Tide clients. Wanted to highlight this because it's a really typical year in the stock market. Every year does experience volatility that can shake out certain investors, but there has been reward for the patient investor and an investor with a really great list of goals and strategy they're working towards. We can see up 13%, north of 13% for the year, but absolutely some volatility during the journey. Onto the Australian budget. The key takeaway from Rising Tide is to please reach out to your advisor to have a chat around the Australian budget and what it means to your strategy and your portfolio. However, at a high level, we did see some significant changes to negative gearing and existing residential properties. We saw changes to capital gains tax, inside and outside of trusts, income tax cuts for anyone earning between $18,000 and $45,000. On a positive note, or another positive note, superannuation and investment bonds were untouched by this budget, so remain a really positive wealth creation vehicle. Greater ATO compliance activity is something we're focusing on here. Some more funding for the ATO to pursue things like data matching. And then finally, zooming out, we wanted to highlight that there continue to remain budget deficits here in Australia currently and into the foreseeable future, which will shape decisions made. Ethical versus standard index products. So it's a really common conversation here at Rising Tide. Standard index products, we are a big believer in as an important part of a wealth creation journey. At a high level, they mean you invest in global stock markets and the investment is dictated by the size of companies in those indices. So they are market cap weighted indices. What this means is the large companies like BHP, CBA, Google, Microsoft, or NVIDIA, these are all larger components of a portfolio, mid-single digits, all the way down to company 500 or 1,000 that are a much smaller part. We then have ethical index products. The building blocks around number one here are market cap weighted indices. However, then a negative screen is applied to remove all the bad stuff. I'll touch on this on another slide. And then number two here, another ethical index or another ethical product is the active ethical. So here, this is where there is an active fund manager making active decisions to make a positive difference in the world. Now, number one on that previous screen there was the negative screen index, ethical index portfolio. This is the type of stuff that gets screened out or exposure limited to. So we take a global market and then remove, as I mentioned, the nasty stuff. So some dirty coal, natural gas reserves, firearms, gambling, adult entertainment, tobacco, alcohol, nuclear energy, etc. They'll get removed and exposures limited to. If you have any questions about ethical portfolios and whether you'd like to explore one of those, please reach out to your advisor at Rising Tide. Now, wrapping up the conversation with a look at SpaceX, a really topical company during the quarter as it made its IPO and hit the record books. Now, a question that was really commonly asked was, what is SpaceX in my portfolio? And if it is, how large is it? Now, you can see, jumping to the last two lines here, if you're in the BlackRock All Growth portfolio or the Vanguard High Growth portfolio, SpaceX is a very, very small part of that portfolio now. And the question is, why? The portfolios here at Rising Tide are index products, market cap weighted products. However, there are restrictions on what companies go into these indices. The S&P 500 is one of the largest index providers in the US, or the largest. They have a 12-month wait period for index exclusion after a company IPOs. And there is criteria for a company to come into an index. Things like free float, the amount of shares that are available to you or I, profitability and sustainability, and then liquidity. So SpaceX might come into your portfolios at a larger weight, but that won't be for the next 12 months, and the future will look very differently to it is today. Thank you very much for your time. If you would like to unpack or explore any of the topics I've mentioned here in this conversation, please reach out to me directly or your advisor at Rising Tide. Thank you, and see you next quarter.